Hey guys, this is Karthikeya Kantwal from Apex Spencer, and I'm back with your daily dose of charts for the equity watch list as well as the index outlook for tomorrow's trading session. But before we start with what's new for tomorrow, out of all the trades that we discussed yesterday, today was a green day. Nothing special. It was one target, and the other two closed slightly in green, if I remember correctly. But the indices, well, they shine really brightly, especially Bank Nifty. I told you guys we had a range of 22,400, 22,200, the 200 point range, and the break of range in either side would give a strong, hefty move of about 200 to 300 points at least. And it broke it on the upside. Now, when we do go to the charts, I'll tell you why it was a breakout and not the general case where we consider a gap induced break. In fact, it was a good trade, and we were able to catch close to 275 to 300 points on Bank Nifty. So it was overall a good day. Even on the currency side of things, GBP INR fell flat on its face. So we were able to catch close to 2000 pips there as well. So it was a green trading session for us, and I hope the same goes for you as well. A good start to the trading week, indeed, I must say. Now, when we talk about the charts for tomorrow's trading session, starting with the equity ones, the first one, as usual, SR transfer. Now, SR transfer, we are going to go for a simple buy trade at the support level. Now, if you were to draw trend lines at this point, then they seem to be converging at a point. So the price cannot actually converge at a point, of course. So it has to go somewhere. And going by the recent price structure, the inability of sellers to push it down further. If you look at the recent swing lows in particular, even after engulfing candles on an early time frame, these sellers are still not strong enough to push it down further. So simply said, we are willing to go long at a nearest demand zone, which is coinciding with the nearest swing low as well. So the idea is to go for a long at 675, stop loss at 665, ideal targets 1% on the upside as usual. Moving on to Apollo. Now Apollo, simple trade resistance. We are going to go for a short. If you look at today's trading session, the buying strength, as we say, that's not really visible in any manner. There is no clear strong buying pressure. There are upper wicks on almost every candle. So the idea is to go for a short at the nearest supply zone, or which is again here coinciding with the nearest swing high. So we are going to go short at 1715, stop loss at 1735, ideal targets 1% on the downside. Moving on to Just Dial. Now Just Dial, if you remember, this was a trade that we had taken on the long side. We took a long above 390 last week. If I'm not wrong, we took it last week or either 1 or 2 weeks ago. We are going to go for a exactly opposite side of that. Since it has broken that support, it should act as resistance once again. So the idea is to go for a short at 390, SL at 395, and the ideal targets 1% on the upside. Oh, sorry, on the downside, not the upside. Now moving on to PL, Piramal Enterprises. PL, we are carrying the exact same trade for tomorrow, which we had yesterday. It is a sell at 1450, stop loss at 1470, and the ideal targets being 1% on the downside as usual. You can check out the reason for the trade in yesterday's upload. You can either check out the video from the channel itself or click on the card at the end of this video. Now moving on to the next, IndusInd Bank. IndusInd Bank, we are going to go for a short position at the nearest swing high or the nearest quality supply zone that we have, which is, if you're familiar with the concept of supply zones, then we have a zone at this point. Now we are going to go for a short position at that point because, it has, it has tried to break that in the past as well, but that was never really sustained. So the idea is to go for a short at 545, stop loss at 553, and the ideal targets 1% on the downside. Now this is pretty far away, but the only genuine reason for it being far away is that, we don't really have any quality entry points between that price range. So you don't need to take any forced trades. Now coming on to MFSL, Max Financial Services. Now here we are going to go for a long position near the nearest swing low. The colors seem to have been inverted at this point. We are going to go for a long position at 539, stop loss going at 532. All right, now it's correct. So we are going to go for a long position at 539, keeping in mind the recent high low structure. Now, right, at the current market price, you could have taken a long trade. The role reversal of the previous swing high point, which is now acting as support. But as I said, it's as I always say, not as I said. Don't try to go too aggressive in the opening candle itself. Now that is the current market price. So instead of catching at that swing point, we are going to go at the previous swing low, close to the previous swing low. So the idea is to go for a long position at 539, 540. Stop loss at 532. Ideal target being 1% on the upside. Now coming on to Oro Pharma. Now Oro Pharma, if you are familiar with the chart patterns, as I have been saying, there was a distorted, you know, head and shoulders pattern at this point on the early time frame. But the neckline, as I said, yesterday, that neckline, it should have been broken, impulsively, but that was not the case. It was not broken impulsively, and since it has not broken that neckline impulsively, we are not going to go for a short position under that neckline, because that head and shoulders pattern is no longer valid. Now instead, what we are going to do here is we are going to go for a long position or a breakout trade on the upside, given the previous swing high is being broken on the upside, which is 880. Now, if you are familiar with the chart patterns, you might as well see a distorted double bottom at this point, but that is not something that I would like to call it. You cannot say that it's a double bottom, because the placement of it is not right. Even more than that, the neckline is a slight tilted, which is not to my taste personally. But if you go by the simple structure analysis, then if you compare the intensity of the movement between the previous swing low movement with respect to the preceding swing low movement, for example this one and then this one, then you can see the first one was a lot impulsive, which resulted in a following sell off. And if you also compare the relative distance between the swing highs at that point and then at this point, then that is also quite large. Whereas if you compare that to the recent distance between the swing highs, this one and this one, that's not really that big. So the buyers are kicking in a lot sooner than expected. So because of that, that is my reasoning. You might as well consider that to be a double top, irrespective of the chart placement, whatever floats your boat. But for me, it is a long above 880. As I said, stop loss at 870 and ideal targets 1% on the upside. Coming on to the last one, Bharat Forge. Now Bharat Forge, it did show some strength today in the first candle, and that candle's low is still protected. So what we are going to do here is we are going to go for a breakout trade once the recent swing high is broken. Now of course it is no longer a flag because of the sheer length of consolidation, and plus it's not at a corrective angle either. So you might as well say that it was entering a different market phase from trending to range bound, and then if it breaks on the upside, trending again. So the idea is to take a breakout trade on the upside, long above 512, stop loss at 504, and the ideal targets being 1% on the upside. Now these are all the equity charts that I had to discuss with you guys for tonight. Now, moving on to the next segment of indices, starting with the first one, Nifty. Now Nifty we had these same zones plotted, and if you do check out my charts or if you see the videos, then I told you guys clearly, if you were conservative, then you can go for a range break trade either side. It was, if I remember correctly, it was between 11,440 to 11,350 ish ka range tha. So we had a upper breakout of that range, and it gave a clear 50-60 point ka move from that point. So if you had paid attention to the charts, then you might have caught this move. Now I personally don't trade Nifty that much, so I was not focusing here, but I did manage to catch the move on Bank Nifty. Now for tomorrow, if this range break that has happened is being sustained, which for Nifty I am slightly skeptical, because the lower zone, or the zone on that we have in the middle, that was crossed in a gap. So I am slightly skeptical about that point, but another zone on the upside was clearly pierced, and it seems that role reversal has also begun to happen, because if you look at the last candle, then it has a long lower wick, which means that the buyers are kicking in at this point. So the idea on Nifty right now, honestly, for me, is to go for a long position anywhere close to the support at 11,450 if I'm being aggressive. Then if otherwise, if I'm being conservative, then I have a long position at 11,400, but definitely no shorting expectations as of now. For me personally, Nifty, I see Nifty close to 11,550, 11,600 in the short time, if once again, as I said, these zones are being sustained. I am talking about the expiry, not necessarily by tomorrow. I do not expect Nifty to go 200 points up tomorrow, but in the coming couple of days, it might. Now that was from the charts perspective. When we talk about the option chain, we have immediate resistance at 11,600 with 240,000 added contracts. We have significant resistance at 11,800 with 324,000 added contracts. On the support side, we have 11,400, as I said, a conservative long entry point because it coincides with a zone as well. So it is immediate support once again at 11,400 with 1.8 million added contracts. For significant support, we have 11,300 with 231,000 added contracts. 11,400 is a very very strong support at this point. As long as that is being sustained well, I don't see Nifty coming down to fill these gaps immediately. In the future maybe, but definitely not in a day or so. Now when we talk about the PCR volume for Nifty, that is still 0.95. The option buyers, for some reason, they are still bearish. Whether they are right or wrong, that remains to be seen tomorrow. Now moving on to the next one, BNF or Bank Nifty. Now Bank Nifty, you might say Bank Nifty was a gap up, but if you observe the nature of the gap up, then if you compare the gaps between Nifty and Bank Nifty, the gap on Nifty is a big gap with respect to Bank Nifty, and it had no interaction with the zone while crossing it. Whereas on Bank Nifty, the gap the opening price was definitely above the zone, but it did slightly interact with the zone. So I would like to consider that as at least an interaction with the zone where some sort of role reversal has come into play. Let me just zoom that out properly. Alright, now as I said, you had this range 22,200, 22,400 broken on the upside. Now for Bank Nifty as well, it is a long on pullback. Now for me, the ideal trade for tomorrow would be to take a long position somewhere close to 22,700. Stop loss going under that at close to 550, 600, with the targets on the upside being 22,800, 22,900. Now that is from an intraday perspective, but Bank Nifty, it seems to be strongly going on its way to 23,000, and I do believe that it is going to hit that. Now when it comes to the option chain, we have immediate resistance at 23,000 with 25,000 added contracts, but a very big standing open interest total. Significant resistance at 23,500 with 280,000 added contracts. Your support side of things, you have immediate support at 22,700 with 300,000 added contracts, and significant support 22,500 with 690,000 added contracts. Now when we talk about the PCR for BNF, PCR of volume, then that comes out to be at 0.77, which is more or less from the neutral side. So as of now, if you were to ask me which of the indices seems stronger, then well, Bank Nifty certainly seems a lot stronger than Nifty. Nifty does have stronger support levels when we look at the option chain, but when we look at the alignment between the buyers and the writers, then Bank Nifty seems to be in a better shape when compared to Nifty. And as usual, as I say, I do trade Bank Nifty a lot more than Nifty. So if I were to go long in either one tomorrow, it would probably be Bank Nifty at 22,700. Now, as always, don't jump into any of these trades. Observe for the first 15 to 30 minutes, or at least, not 15 to 30, but at least 30 to 45 minutes, or the first 2 to 3 candles on a 15 minutes time frame on indices especially, so that you have a bias for the entire trading session on how to approach taking a trade on that particular index. Now, these are all the charts that I had to discuss with you today. As usual, if you want any of this content, all these charts, the option chain analysis, or even the watchlist trades, then you can check out the Telegram channel at Apex Finser. You can also check out the Instagram page and the Twitter handle. These things are shared there as well. And again, once again, if you do like the content and the charts that we have been posting, or well, if you have made any money using the trades as a confirmation, then do let us know as well. It certainly feels good to hear that coming from you. And as usual, do not forget to like, share, subscribe, and hit that bell notification icon too. Thank you so much for watching, guys. I hope you have a really good trading session tomorrow and you end up on the green side more often than not. Have a good night. Bye.